Good afternoon, everyone. This is Tom Lane, DM2's Vice President of Sales. I want to welcome you all to our Business Intelligence webcast. The title of today's webcast is How Can We Get More from Our System? Today's presenters will be Rob Pierce, our Vice President of Professional Services, and Erin Leale, our Professional Service Consultant. And today they're going to provide you with an overview of the various business intelligence tools in your system with the mindset of trying to help you understand which tool to use when. There will be a brief discussion on the importance of data integrity, followed by 3 story-based examples of how you can use these tools to make real improvements in your organization's pricing, margin, and volume. Before we get started, just a couple of quick housekeeping things. Because of the number of people that we have on the webcast, we've got everyone muted. You'll notice that there's a chat window. If you have any questions, feel free to chat those into the window. And towards the end of the presentation, we'll have a Q&A session, and we'll try and answer all of those questions. In the event that we run out of time and are unable to answer everyone's questions, we'll send you follow-up message with all the answers to those questions. And then the other thing I wanted to make you aware of is that we are going to be recording today's session, and then we'll send out everyone who has attended or registered for it, we'll send them a link to get to the recording so you can review it afterwards and share it with the rest of the people in your organization. On that note, I will hand it over to Rob and have him kick off the webcast.
Hi, Tom. Thanks. Erin and I work together on a business intelligence webinar. A common question we get from customers is how do we get more from our system? And BI tools is certainly one way to do that. The topic of business intelligence is pretty large, so we were keeping it focused really on what are some of the simpler tools to have effective change in your organization. So the point of our presentation, just to reiterate, share some simple yet effective BI tools. Excel is a real common BI tool, and we're going to have a lot of examples there, which can provide actionable information to help you guys get those changes that you're looking for in your organization. So who would care about this topic? People that want to improve margins, grow gallons, streamline processes, implement better internal controls, and generally get more from your system. And when we hear that, we want to get more from our system, that gets interpreted a little bit different with every company we talk to. Some people are looking at growing revenue. Some people are looking at cutting costs. Some people are looking at better margin management. These BI tools can be used to accomplish just about any of those categories. As we get in here a little further, we're hitting this topic from a 10,000-foot perspective. We're going to be talking about some general theories, concepts, best practices. Towards the latter half of the webinar, we're going to show actual examples of reports and BI tools that people are using in the field to make effective change. This webinar is really not intended to be a step-by-step how to write reports training class. YouTube is a great resource if you want to go to learn how to use Excel. Or if you just generally Google pivot table tutorials, you're going to find all kinds of great online free tutorials on how to actually use some of these tools. Of course, DM2 has consulting services for that level of training as well. Just want to kind of clarify the intent of this webinar. It's more for examples as opposed to actual usage training. Another little small disclaimer, I'm sure everyone's hearing about the new SMI or Sage Mass Intelligence. It's an Excel-based tool that's a replacement not only for FRX, the financial report writer, but it's also a new business intelligence tool coming out by Sage that will let you report on your non-financial metrics as well. That is not covered in today's webinar, but it's definitely a big item on our radar. We're going to have lots of training classes and training webinars in the not-too-distant future on that topic. Today's agenda, so we'll hit the business intelligence theories a little bit, just share a couple of the different perspectives that we found doing our research. We'll have a nice tools overview. If you think about what's in your math suite, you've got all kinds of reporting tools. Sometimes people get a little bit confused about which tool do we use to achieve which objective. So we put together a nice matrix to help you make those decisions. We're going to cover data integrity, the whole garbage in, garbage out conversation. We'll keep that short. And where I think most people will find interest are the actual examples of how these tools are being used in the real world to actually make effective change for companies. I'm going to do a little commercial here for Sage. I won't take too long at it. On the left, Intuit, those are the makers of Quicken and QuickBooks. In the mid-level ERP market, they account for about 4% of total market share. Microsoft, with Great Plains, Dynamics, and so forth, accounts for about 10%. Then you have SAP and Oracle. They're also around 10%. Most people don't understand just how large Sage is in the mid-level ERP market. They're 50% larger than their nearest competitor. There's almost 3,000 people using Sage mid-level ERP products in North America, and that number more than doubles if you look globally. It is absolutely the solution recommended by more CPAs than any other. So the point of this little commercial is just to impart to you that you guys do have a world-class ERP system. It is loaded with lots of great reporting tools. And today we're just going to show you how to get the most out of some of those tools. End commercial. Here's one theory. Again, this webinar may seem a little choppy because we're telling lots of different stories. It's just not one continuous story. This is just a data model that Erin and I came across in our research. We thought it was interesting. We want to share with you. I think it does a good job of explaining some of the features. I'm going to try to use the highlighting feature here. It starts off describing the physical activity. So these are the events that are taking place out in the real world. You have salespeople out there making sales calls. They're taking orders. You're making deliveries. You're receiving payments and so forth. That physical activity is getting recorded on source documents. So your sales folks are putting appointments in their calendar. They're generating sales orders. You're getting VOLs. You're printing and mailing invoices. You're receiving checks and so forth. Those source documents are then entered into your computer system. And when we say documents and data entry, those are in quotes because more and more there's a conversion from paper into electronic files. So instead of people generating paper that gets hand entered into your system, you're now getting electronic files which are getting imported into your system. The point is, as that information flows into your ERP system, you're developing a digital model of what has taken place out in the physical world. And one of the main goals of BI is having a data extract using BI tools, which gives you a data model that has an accurate description of that physical world. If I'm looking at a good report, it'll tell me how many sales calls were made, how many were converted into orders, how many deliveries were made, how many dollars did we receive in payments. Those are the characteristics of good reporting. Further, what's powerful about the world of business intelligence compared to just going out and observing what's happening in the physical world is that with a good report, I can see what's happening across my entire organization. I can see what's happening across multiple branches and different sales territories. And more importantly, I can see what's happening across time. Not only can I understand what's going on today, but what happened over the week, over the month, over the quarter, over the year. So a good BI tool lets you kind of transverse time and space to look for those trends and opportunities and problems that are emerging, and then gives you the opportunity to do something about it. So definition of business intelligence, we did a lot of research on the web, and basically the general theme is they're tools to help you make good decisions. We weren't quite satisfied with just that, and I'll explain why in a minute. We borrowed a little bit from Howard Gardner, Harvard professor. His definition of intelligence includes the ability to solve problems, and that kind of syncs up with us because that's what we do as consultants. We're out there trying to help people solve problems. Robert Kaplan is also another Harvard professor. He's kind of the father of ABC Cost and Balance Scorecard. Those are two really prominent BI tools. When he was first introducing those out in the market, he had two different experiences. One where he introduced them into organizations, and they really took off, and they had dramatic improvements in the company. And with other companies, the BI tools that were in there, they were giving really good information, but it didn't have any effect in the company. He and his team, that really bothered them, so they started investigating this more. And what they found the difference was that the first group of companies, whoever was running the report, for whatever reason they were really motivated to do something about it. They had formal authority in the company. They had the political clout. They could do whatever was needed to correct the underlying problem. Whereas that second group, the person who was getting the reporting information, for whatever reason, they could not affect change in the organization to correct any of the problems. So one of Robert Kaplan's suggestions was whenever he's implementing a BI tool, it's not only just giving somebody a nice reporting tool, but it's also identifying the people and giving them processes to do something about that information, to actually make corrections inside the company. And that's really how the BI tools become effective in a company, because that's the ultimate goal, is to solve problems and make changes in the company and get things done. Actionable information. So here's another kind of buzzword at DM2 you hear quite a bit. If you look at some reports, they may give you information. We'll take like a P&L. If you see your sales on there and sales are in decline, that's critical information to know, but the P&L doesn't necessarily tell you why it's in decline. And if you don't know why it's in decline, you really don't know what to do about it. So a form of a good report would tell you not only what needs attention, but also what was the underlying cause for that trend. It's only when you understand what the cause is, then you can deploy resources to go out and do something about it. So our little graphics here are, the drill for drill down, or the onion for peel the onion. Best practice tip from folks out in the field is as they're doing the research into the root causes, so they're running the reports, it's telling them they've got a problem, they assign someone to go out and research what that problem is, they're actually keeping track of that. They're logging these over time, the who, what, when, why, how. And what they've noticed is patterns are emerging. And the patterns generally fall into one of three categories of people, process, and tools. And this theme of people, process, and tools, we're going to see it coming up all throughout our webinar. It's going to be a big theme in our consulting group as well. We're making the case that you really need all three components to have an effective solution. In this case of BI, you need good BI tools to help you identify what the problems are. You need people to take effective action with that, and you need processes to tell them how to run the reports, when to run the reports, and what to do with the information. So a common question from our customers, we talk about, hey, you've got this great ERP package. It's got all these fantastic tools in it. It could really do a lot for your company. They say, that's fantastic. Where do we start? What's the first thing do we do with it? So we're going to share one approach that will be effective. Okay, so this slide has a lot going on, and this slide is really going to serve two separate conversations. So let me get through the first conversation here. It's kind of a graphical representation of a jobbership. So we broke down a jobbership into three main components. There's your get business group, your deliver business group, and your record business. So if you think of that from a functional perspective, here's your sales and marketing team, here's your operations, your distribution team, and your accounting group. If you translate this into software, this is your CRM system, these are your distribution modules, and these are your accounting modules. If we go back into the 80s, most people had accounting systems, and that was about it. And then as things merged into the 90s, they started handling some of the operations side of the business, and that was kind of the birth of the ERP, or the enterprise resource planning system. A lot of people today call that a back office system. Today, people are now beginning to, like DM2, we're starting to integrate the CRM system into the complete ERP suite. And so the new buzzword you might start hearing around is an extended enterprise. And what this extended enterprise is, it is an accounting system, or a software package, I should say, that really handles all three of these business areas. So there's the end of conversation one. And I just kind of needed to have that explanation as the backdrop for really the second part of the conversation that's relevant to BI. This lower portion down here are your business processes running across those different areas of business. So over here we're sending out fuel quotes, getting orders, picking up fuel, making deliveries, and then recording the pickup and delivery information, processing cash receipts. These are your business processes. It's how well you do these business processes that's going to drive your efficiencies and your effectiveness in your company, and the result of that effectiveness is what's going to show up in your income statement. So the point of this is your business processes are your drivers or the causes, we'll say, and your financial statements are really the effects or the outcomes. And we'll get to why we're making this point here in just a minute. The balance sheet is also another key financial outcome, especially in the petrol jobber business. Inventory and accounts receivable are key balance sheet accounts we want to watch. So here's why we put this link between cause and effect. Because an approach of trying to figure out where do we start with our BI analytics, where do we want to focus our attention, is to work backwards off your financial statements. If you look at your financial statements, usually there's one area of concern or opportunity on there. For example, if you said, sales are in decline, we really want to do something about sales, then we would look back into your operational or your sales processes and say which one of these processes has the most influence over that P&L line item. Maybe it has to do with your pricing strategies or your volume. And then you would build your BI and your business initiatives around the processes that are driving this particular line item. We've done this with quite a few customers and it's been pretty effective. We'll have some actual examples towards the end of the webinar. So summing up this section of the presentation, understanding that relationship between process causes, financial effects is critical because that helps you focus your attention. Capturing a solid data model of the process is important. A lot of times when people are capturing information, let's say on a sales order, it's only for the purpose of generating an invoice, getting it out the door. And what we would like to challenge you with is think about not only the data you need to process the transaction, but what is the data you want to do your analysis on to make decisions on as well. So although things like on-time delivery, that's not necessary for generating an invoice, it may be important for your analysis. Your ability to get on-time delivery may be something you want to capture on the sales order so that you could do analytics on it down the road. After you captured that, then you build reports on the process. And then most importantly for the Robert Kaplan story is you need someone identified to take corrective action on that information. If you're just getting lots of reports but no one's taking action on it, then you're really not going to ever get much more out of your system. Moving into the tools overview. So we have quite a few customers say, we bought this suite of modules. It has 10 different reporting tools in it. How do I know which tool to use when? So to help answer that question, we put together this little tools matrix. I'll kind of run through this with you. It's not all of the tools in your Mass ERP suite, but these are the most popular ones. What we did is we looked at the roles in a company, and we kind of divided it into three major categories: clerical, managerial, and executive. If we look at the clerical role, it's usually task-oriented. It's that day-to-day work that's getting done. The kinds of data sources they're working with are your customer master files, inventory master files, data entry files, cash receipts entries, sales order entries, so forth. The time frames they're focused on are more at the batch level or the day or the week. And the kinds of tools that really serve their purposes the best are things like Business Insights Explorer, the pre-invoice gross profit journals, and Crystal Report, Knowledge Sync. And as we get towards the end of this webinar, again, we're going to show you actual examples of all of these tools and uses. At the managerial level, they're really more focused at that process level. They're interested in controls and efficiency. Their data sources run anywhere from batch level updates to period-based reports. The kind of time frame they're interested in, anywhere from 1 day up to a full period. The kinds of tools they're more interested in are end-of-day tools. Profit Link, again, Crystal, and Knowledge Sync. At the executive level, these are the guys looking for the strategic decisions for resource deployment. They're going to the larger transaction history files because they're interested in time frames that span multiple periods or multiple years. This is where the SQL data warehouse really shines because it gives you years and years of reporting information, but it gives you the ability to drill down to the actual line item of any invoice that is driving those numbers. So it becomes very actionable information to make corrective actions. Summing up the tools, BI tools really do not need to be complex or expensive. That is one of the key points we're making in this webinar. There are lots of very expensive BI tools out on the market to work with your math system. We're going to make the case that you already have the majority of what you need in your system, and especially, well, we'll work through here, BIE, EOD, pre-invoice gross profit. They're in your system if you're on a relatively recent version of math. Knowledge Sync, it's not a stock feature, but it's pretty inexpensive. I think it's about $400 to acquire it. SQL Express is a free download from Microsoft. Most people can load it on a piece of hardware they already have. And of course, most folks already have Excel. And a key point we want to make is that the average return on investment for doing these BI projects is literally weeks. It's not a big investment. Your return usually comes back to you pretty quick. So now we're going to move into a brief conversation on data integrity, or the good old garbage in, garbage out conversation. So you guys have a world-class ERP system. It's an integrated ERP system. Part of the power of that is you're not having to replicate a lot of data entry. That's one of the main benefits of an integrated ERP. An example of that would be entering a sales order. Really, you just need to enter a few pieces of information, like maybe who the customer is, what's the item they're buying, what's the quantity. You enter in 3 or 4 pieces of information, and the system will automatically populate the other 40 or 50 fields that you look at on that sales order. The address, the terms, the salesperson, the warehouse, all of those things. They're all coming from your setup files and from your master files. So the accuracy and completeness of your setup and master files is very important for getting accurate information on your sales order. And as that sales order gets converted into an invoice, if your system is also drawing more information in, that's when it's bringing in the current cost of the system. And as you update that information into your computer, it's populating many files inside your math system. Again, it's part of that benefit of not having to rekey that information into different tables. That's what the software does for you. But if we're feeding bad information into it, well, now it's got bad information throughout a lot of different files. And the same is true when we go through the reporting process. As we're extracting information out of the system, it's pretty common that your reports are linking back to your setup and master files to kind of enhance your reports with additional information. So again, if we have bad information in setups and master files, we're just introducing more bad information onto our report. And if we have bad info on our report, then we're kind of compromising our ability to make good decisions. So to turn all of that around, if we have good information in our setups and master files, then we're leveraging that value going into our system, and we're going to get better reports coming out to make better decisions. When we first work with customers in the sales cycle, it's not uncommon that a key complaint is that their old system, the database, is not all that accurate. There's a lot of garbage in their old database. So working with folks to clean up their database is something we do quite often. We have some different techniques and tools to do that. Here's one approach, is to go through and I look at what you need to process an accurate invoice, for example. Your customer information needs to be right, your inventory information, your tax information. So at the minimum core, make sure what you need to get accurate invoices to your customers and GL postings. Those need to be cleaned up. But also we're challenging folks, think about the kind of reporting and analysis that you want to do at the end. That's going to identify additional fields that you may want to put into your cleanup efforts. One common approach to the cleanup efforts is to write either Crystal reports or Excel reports or SQL database reports, looking at those key fields. You could write exception rules, and we'll show you some examples of these later on. And you identify someone to kind of own running these reports on a scheduled periodic basis. And also, this is the most important part, you've identified someone to clean up those data issues. They need to go in and clean up what the negative effects were, as well as going to the root cause, you know, the setup files, the master files, and filling in those missing fields or the inaccurate fields. If you've got some fields that are a little bit more important, they can't wait, you know, for that once-a-week review and cleanup, Knowledge Sync is a tool so that if someone entered a tax code today and they left it blank, you could have Knowledge Sync set up so that anytime someone enters a customer with a blank tax code, it would immediately send an email to someone who's in charge of correcting that action. So Knowledge Sync is a good tool for real-time notification, whereas Crystal or Excel are good tools for those periodic review and cleanup. So this role, this person who's out there, you know, a database administrator is the official title. Most organizations aren't big enough to have a full-time database administrator. It's usually just one of those mini hats that somebody in the organization is assigned. So summing up the data integrity section here, people process tools. We keep coming back to that. It's what's required for the solution. So the tools are exception reports. The people is who's going to review this, who's going to do the cleanup, and the process will define how and when they do this cleanup. Now we're going to move into the example report section. This was the matrix we saw earlier. We're just going to go in and actually show some examples, for example, of business insights, pre-invoice gross profit, end of day, so forth and so on. This first report may be something everyone's familiar with. This is your classic printed AR aging report. The problem with this report is that as every minute passes, this report is becoming more and more obsolete. And the second problem with it is all of these valuable notes being taken here are not being captured in the system. They're not available to all of the other people in your company. This next report, sorry, there's a little lag here. This report is generated through Business Insights Explorer, and it is also an AR aging report. The difference is that this one is updated in real time. So every time an invoice is generated or a cash receipt is processed, this information is automatically being updated. Additionally, this report is live and interactive. Not only can I look at what's going on with my aging, I could sort it different ways, I could filter it different ways, but if we go over here to the left, there are all kinds of other activities that I could be doing with this. I could go into the customer memos, and this is where I could be putting my collection information. I could look at the customer's payments. I could look at invoice history, focus on just open invoices. All of those detailed clerical task level chores that need to be done can be accomplished through this screen with this live interactive report. The end of day tool. So this was a feature released towards the end of 405, and the purpose of this tool was to communicate to people on a daily basis how are they doing with their key balance sheets as it relates to the subsidiary value balancing to GL. So if you have this set up, every morning you're going to get an email, and in that email is an attachment that looks very much like what we see on the screen here. It's going to tell you for your key balance sheet accounts, inventory, receivables, payables, so forth, am I in balance or not? And if you're not in balance, then the assumption is that you're going to assign someone to investigate and not only fix the imbalance situation, but understand what was the root cause, what caused you to go out of balance, and fix that issue as well. This has been a very popular report and helped people make a huge improvement in their company. This next slide is pretty clever. One of our customers came up with this on their own. Part of what that end-of-day tool, our original intent was you'd get that email notification. Part of what it also does is it's logging all of those that information in those emails, it actually logs and keeps track of them out here in this EOD log file. So a couple of our customers started writing Excel queries off of those EOD log files. And what that allows them to do is to see trends on how well they're doing and keeping their key accounts in balance. So they get to see the general pattern of, are they getting closer to getting in balance, or are they trending away from being in balance? So here's a couple on accounts receivable, accounts payable. And this next slide is showing purchases clearing for fuels and inventory. Another best practice, and it's kind of a repeat of the best practice before, but it's a little bit more focused on the end-of-day tool, is that as they were doing that investigation and fixing, they started keeping a log of what the problems were and what the fix was and who was involved and whatnot. And they kind of reported back the same thing we heard from other people, that if you keep these logs, you're going to start seeing patterns emerge. You know, a lot of the problems are going to be related to a certain person. So maybe that person needs additional training, or maybe some roles need to get redefined, or maybe it's related to a particular business process, a functional area. Maybe some processes need to get redefined, or maybe you've got a bad tool. So there's all kinds of reasons, but it helps them see the patterns and identify where to focus their efforts. A lot of our customers are asking more and more for dashboard reports. Excel has lots of great graphing and charting capabilities. One thing Excel doesn't have out of the box, you can get them as add-ons, are gauging capabilities. Well, Crystal Reports in its later releases does have gauging capabilities. Here's a few reports that Erin did for some customers. So we just wanted to share this. Not all of our customers were aware that Crystal can do these kinds of things. Crystal is the world's #1 report writing tool, and it is something that comes stock with your system. I'm going to let Erin speak to the next few slides here.
Gross profit reporting is very important in the fuel industry. To find problems before you...
Sounds like you might have some technical problems, so I'll go ahead and speak to this. This is the stock gross profit report. It will show you the gross profit on every invoice of every transaction. It's a great report. Some of the feedback we get as to why it does not work is that it gives a little bit too much information. So to answer that request, DM2 created its own gross profit report. This one will show you only the exceptions, only the transactions where the margin has fallen outside of a tolerance range. So this makes it a little bit easier to work with for larger organizations. Additionally, here's an example of a gross profit report that Erin did in Crystal as custom for one of her customers. This not only fulfilled the need of identifying which items were out of the gross profit range, but it would also let them know which invoices were missing in key pieces of information. For example, that gray highlighted item is missing the truck code on the far left. And this report also does some nice summarization features like the total number of deliveries here in the bottom left, as well as summing up what's the margin by different business lines for the day. This is a stock feature in CardLock. It's called the pricing only option. What it allows you to do is prototype your margin for your CardLock invoice run prior to actually printing the invoices. So specifically, this 2 here is telling you that you've got 2 transactions in your diesel product line where the margin is between 0 and 2 cents. If you were to double-click on that number 2, it would then tell you, it'll take you to the specific detail of the transactions involved. This again allows you the opportunity to go out and reprice those transactions before you would actually print the invoice. Knowledge Sync, Erin, are you able to join us yet? I'll go ahead and speak to this then. Knowledge Sync is a business activity monitoring system. What it allows you to do is set up filters and selection rules to look into your database. And based on those triggers being met, the system will automatically generate an email. And here, Erin gave a few examples of the kinds of emails that people would receive. This is an example of an email. In this case, the trigger was, please notify me of anyone placing an order greater than $4,000. So that event was met, and the system automatically generated an email alert, and it relayed who the customer was as well as what the total sales amount was. ProfitLink is a reporting tool that DM2 has had in the system for quite a while. It was one of our earlier BI tools. What it does is take the sales information at the invoice line level and automatically exports it out into Excel pivot tables for you. Back when Excel had a limit of 65,000 rows, that was a limitation we needed to accommodate. Therefore, we limited ProfitLink to only handle 1 month's worth of activities. If we went more than a month, then some of our customers would have exceeded that 65,000 row limit. Today, we have the SQL data warehouse and the sales debt table. The sales debt table is very similar to ProfitLink. The data is very similar, except that it covers multiple months and multiple years with the same drill down capabilities. This is a common report that customers take interest in inside ProfitLink. It ranks your customers by gross margin. Column E here has the ranking, and the question is on column F and G. What do these mean? So, for example, the first customer, Blue Enterprises, accounted for 5% of gross margin, but he makes up only 0.27% of all of the customers who purchased for the month. If we look at the next one, customers 1 and 2 together account for 8% of gross margin, and customers 1 and 2 together make up about 0.5%. So these are running totals. They're aggregated. The point I'm trying to make, if we're to go to the bottom of the report, what we're saying is 40% of our gross margin is coming from 6.5% of our customers. So the action, the key takeaway of this report is half of my margin is coming from only 24 customers. We want to make sure that we're giving proper attention to these 24 customers. The other interesting side of this report is the very bottom of it. That's where you're seeing the customers where you're actually losing money or you're making an extremely low margin. And again, it gives you some actionable information because now you need to know which customers to go visit and restructure those relationships back into a profitable one. Another tab on ProfitLink is the gross margin by category report. So this looks a lot like that card lock pricing only option where it tells you by product line how many invoices do we have that are in these different margin categories. And if we see one that's of concern or of interest, for example, here's an equipment one where it's saying that we're selling it below cost, you could double click on that inside the Excel pivot table and it would give you the full invoice detail, telling you exactly who the customer is, who the sales rep is, what they bought, what they paid for it, what did we sell it to them, all of those details. ProfitLink, just like sales debt again is related to our SQL data warehousing feature, has lots of different kinds of drill down reports. This particular one is focused with salesperson, customer, and item. These drill downs can be sorted or arranged any way you like. So for example, it could start with customer and then you drill down from there, or it could begin with the item and you drill down from there. In this example, we're starting with the salesperson of Eddie. If we click the plus sign next to Eddie, then we'll see all of the customers that bought from Eddie. And if there's one of those customers that we're curious about, we want to drill down on, we click the plus sign next to them, and now we see all of the items that that customer bought. And if there were anything here that we wanted more detail on, we would simply double-click the numerical value out here on the right, and it would give us, again, that full invoice detail behind these numbers. This report is not a pivot table. It's just simple use of Excel. So the customer populated columns A through E with information out of their system. They could have done this using a variety of tools. They could have exported it with Crystal. They could have used Visual Integrator. This could have been done with a SQL data warehouse. They could have used Excel to query. There's lots of ways to bring this information into Excel. In the columns on the right, these were all just formulas that they wrote inside Excel. So the intent of this report was they set up a new customer and they have some kind of expected volume they're going to do. They're comparing that projected volume against the actual volume and seeing how they're doing. Are they short or are they on target for their gallons? And then they just multiply the gallons times their original margin to see how did they do of actual gross profit versus the projected gross profit. Then they just calculated the variance between those two numbers, and now they're looking for the restructure opportunities. This first customer, we gave him a low price because we expect him to do 5,000 gallons. He's doing less than half that, so we're not making the profit we really expected. So this gives us an opportunity to go out and either engage them for more gallons or to reprice them. We're also on this report, we're kind of demonstrating a couple of the data analysis tools in Excel. There are these icon features. These are just stock Excel features, or the automatic formatting, highlighting features. Those are just standard Excel functions. This, again, is just standard Excel. There were 4 data points captured, and you can't see them on the screen. You can just see the titles, but here's customer down here, the fuel type, how many gallons they bought for the month, and what was their average margin for the month. This was put into a scatter plot where you have the gallons going across the x-axis and their average gross margin going across the y-axis. What this visual representation made very easy to see was who are the customers that are getting both low margin and low volume. Again, it's kind of a similar report to what we saw before, just a little bit different format, but it allows you to easily identify who you need to go out and visit and talk about either growing their volume or perhaps raising their pricing. And the details of who to go speak to would be down in the data table down here that's off the screen. This report was done off of FTZ, which is the TaxLink table. So when you run TaxLink and you extract all of your tax information for your tax reports for the month, you could put that out into Excel. You could do that either by querying with Excel. This particular customer used the SQL data warehouse feature to get it. And they built some exception rules. So, for example, if they had any FTZ record where the tax schedule was blank, they wanted to identify that with a 1. Otherwise, they left it 0. If they had anything where a state code was a blank, they would want to flag that with a 1. And they had other rules for other data conditions that were important to their reporting. After the report was populated with all of those rules, then they just did a quick pivot table report on those exceptions. And this made it very easy for them to identify where they needed to go out and fix their data problems before they generate reports on all of those records. Because if you write reports on bad data, you're going to get bad output in your reports. So where are all the boat cars? And I swear this will be relevant to our topic. If we look on the road, we're not seeing a lot of floating cars. If we look on the lakes, there's not a lot of drivable boats. And the reason for that is, although the concept of having one vehicle that can do both seems really appealing, the reality is when you build something that does both, it's not really effective at being a car or at being a boat. So as a result, in the real world, what we see really are more cars and boats and less boat cars. So why this is relevant to the world of business intelligence is because when people are building a computer system and designing a database, they also have to make this trade-off. They have to say it's going to be really good at doing transaction processing, or it needs to be really good at analysis and reporting. If they try to build one that does both, then they end up with this compromised system that's not really best in class at doing either one. Sage made a concerted effort to really focus on running business, transaction processing. They do this best in class, as we saw earlier with my little commercial. They're 50% ahead market share of some major players in the industry. They really shine in this area. As a result, there's lots of people that have had aftermarket BI tools to kind of compensate for their focus over on the transaction processing. There are many, many high-end, expensive BI tools you could buy for mass. What we're trying to communicate today is you really don't need those. The SQL Data Warehouse solution, as we talked about, it's a free download from Microsoft, and it will give you 90-95% of what you could ever hope for as far as business intelligence is required. DM2, we'll show in a minute, has enhanced the system to automate the transfer of data from the mass system over to SQL. And for you heavier duty BI guys, with the capabilities inside SQL, it could also reach over and pull mass from data into SQL. And now you could write a lot of your reports and dashboards and queries and so forth off of your SQL Data Warehouse, kind of taking some of that burden off of your core business processing machine. Really not part of today's conversation, but this is for the heavier duty BI guys. When you're writing SQL script to pull data across, the only point I wanted to make is it's not that complicated. If you know how to write Crystal reports, if you're pretty good at writing the formulas and whatnot inside Crystal, learning SQL script is not that difficult. That's just the only point we wanted to make here. Pushing the data from mass over to SQL Data Warehouse is how most of our customers do it. So here inside Modules, Library Master, under DM2 SQL Export, you'll find a menu item called Export Setup. It's a one-time setup. You get this screen over here on the right. You highlight which tables you want pushed over in the nightly push. You work with your IT guy. He sets up, the Windows scheduler to execute the export, and that's it. As far as you're concerned, it's transparent. It happens automatically at night. One of the benefits of this SQL export is that in addition to whatever mass tables you want pushed over, you also get this famous sales debt table. And sales debt is short for sales detail. This is ProfitLink's bigger brother. It gives you all of that line level information from an invoice, who the customer is, what the invoice number is, what did they buy, how much did they buy, what was the cost, what was the price, what's my gross margin. Not only do you get all of that detail, but it's also been enhanced. So some examples of enhancements are in the product line, not only do you get the product line code, but you also get the description of the product line. It does that kind of same thing for salesperson, for example. Not only do you get the salesperson code, but you get the salesperson name. If you work with DM2, we could help you define something such as a business line. That's not a stock field that's captured in mass, but we could create that on the sales debt extract. Some other examples are the invoice date. We could spin off what's called a period. This just makes some of your reporting easier, so we'll see this used in just a minute. Your quantities, sometimes you're selling fuel by the gallon, but sometimes you're selling lubes by the drum, pail, or tote. We've done some gallon conversion for you so that it's all normalized to gallons. And here again we see the gross margin categories kind of as we saw in ProfitLink. So the 6 queries, when the sales debt SQL Data Warehouse solution was first developed by Steve Murphy, he was talking to the owners and top executives at jobberships across the country, and they came up really with this, just a group of 6 main queries that kind of hit target for 80-90% of what their BI needs were. The top group here are all focused on high-level trends related to gross margin, gallons, and cents per gallon. And if you look at the math equation here on the right, it certainly makes sense. You're kind of analyzing that interplay between gallon volume and your margin and seeing how your pricing affects the volume. The second group is more related to drill down. So you've got a customer analysis. This helps you answer that question, which customers are buying more or buying less, or more importantly, who's about to leave us. You have a product focus, which products are getting hot, which products are going cold. And the system also has a daily flash report, so you can see how you're doing in real time compared to previous periods. This first report is an example of those high-level trends. So over here on the left, you can see these are the various months. On the right, these could be the years. Some customers do a 2-year analysis. Some customers do a 3-year analysis. You can slice and dice these reports by business line, salesperson, any field you want to put up here. At this point, we're in stock Excel. These are just pivot tables. So if you don't know how to use pivot tables, highly recommend you just go out on the web, Google pivot table tutorial, and learn about pivot tables. They're a very powerful analysis tool. And then most again, it's stock Excel, so you could use any of the charting features. Most folks just prefer this bar chart because it makes it really simple to see the pattern as it relates to activity over a given year, as well as compared to the year prior. I'm working with some test data here, so please don't get caught up in the actual numbers. If you could just stay a little bit more focused on what the formatting is. This next report is given an example of what the customer or product drill down would look like. So this looks a lot like that profit link report we saw earlier on customer drill down, except what's different about this is that we could go across multiple months and across multiple years. So I could see buying patterns as they relate to customers, or from a product perspective, what are the trends? Which customers are buying less, which customers are buying more, not only from month to month, but year to year. This is the daily flash report. It's really 2 separate pivot tables. There's one on the left, one on the right. And what it allows you to do is to compare activity across 2 different time frames. So this report is comparing, October to October last year to this year. But it could also compare October this year to September this year. So you have full control of what the time frames are. And the way that it's typically used is people have some kind of a comparison period on the left, and they have the current period on the right, and they're looking at this on a daily basis to see how they're tracking against prior activity. One piece of information we heard from folks is by the time they get mid-month, they're able to pretty much predict how their month is going to end up, plus or minus 5%. Powerful tool. This is an example of using that gross margin category inside the sales debt file. It's a really simple report to create. There's only 3 pieces to it. They put the period in the upper section. They're counting the number of invoices, and they put the gross margin categories down the left-hand column. When they did this and charted it in bar format, you could now see the pattern of your gross margins. This particular customer really wanted to, they were focused on margin management. They wanted to restructure their low-end profitability relationships to be more profitable. So if we look at this group here on the left, what you see over the 3 months is that the number of invoices and these low margins is actually in decline because they went out and visited customers and repriced customers, and they took action to do something about these low margin customers. Conversely, if you look at this group of, and this was their target margin range. They said, we want to get everybody into this range of margin. And you could see that the green bar is actually growing in this range. So over this 3-month period, they did a lot of repricing initiatives. They revisited customers, and they moved a lot more of their invoices from those lower margin categories into this target range that they were looking for. So the BI tool helped them identify that, and now they have measurable evidence that it's actually taking place. This is a great report. What it's doing here is showing your various trucks down the first column, and it's got the days of the week across the top. The purpose of this report was for load balancing. So they're trying to see where are we overloading a truck for a given day, and maybe where we have some capacity, we could do a little bit of shifting of across trucks or across routes to optimize and load balance. This next report is pretty much the same information. What we did is just enhanced it a little bit with some of the stock features inside of Excel. So again, we used that auto formatting feature to make it really easy to see, there's a guy that perhaps is overloaded. The action item here is perhaps we want to shift some of his deliveries to the day before on Tuesday where he looks a little bit light, or if we really need to keep him on Wednesday, maybe we can move him to the truck below. He seems to have a little bit of capacity on that same day. Other Excel features are these trend lines. So it's just another way, these are called spark lines, another way to kind of see the patterns of data, or these data bars here. I think the data bars are probably a little bit more effective, for this particular analysis. It would not be a best practice to have all three of these tools on one report. We just put all three on here just to kind of give you guys examples of the kinds of things you could do with Excel to help you look for those opportunities or problems in your data as you're doing your analysis. This particular customer was focused on their accounts receivable. They really wanted to bring down their average days to pay. So they contacted us and asked us to enhance their sales debt file to have the average days to pay added to it. And once they targeted that, they then looked into their business processes and said, we need to get our credit limits updated. We need to have better credit management practices in place. They got some credit management alerts in place. They started using the BIE for their collections as opposed to their traditional aging techniques. So they made changes to how they run their daily business. And again, they're using the BI tool to measure, are they being effective or not? And in this case, these guys are doing a great job. CRM, it's not in today's webinar, but I just want to make a point that CRM has its own world of analytics. This particular one here is a sales pipeline, so it allows you to see how many potential sales do you have in your pipeline and how are they progressing through the various stages of the sales cycle to eventually become sales. So again, CRM is very heavy in analytics and business intelligence. We just didn't get a chance today to talk about a lot of those. It's probably a big enough animal that it will warrant its own future webcast. So in summary, to answer the question, how do we get more from our system? What we started off with defining intelligence is the ability to solve problems, and what we're trying to make the case is that a solution requires not only good intelligence, but also taking effective action. So we have the BI tools. Usually you want to measure on both performance and control for speed and accuracy. You want to have some kind of a process defined that says, how do we measure these? When do we measure these? What do we do about it? And I think most importantly, having the people identified who's going to be held accountable for taking action and actually making improvements on this information. It's making improvements in your company is what solves problems, and that is the ultimate answer to how you get more from your system. All right, that timed out just perfect. Tom, I guess I'll hand it back to you, and we'll open it up for questions.
Okay. Billy's Billy, our sales consultant's online, and he's monitoring the chat window. Any questions come in, Billy?
Not at the moment.
Okay. Why don't we keep it open for questions for the next couple of minutes. If anyone has any questions, please feel free to enter them into the chat window, and we'll do our best to address them. While we're waiting for questions to come in, I just wanted to mention that we're in the process of putting together a webcast schedule for 2011. And as soon as we have that finalized, we'll be publishing that and sending out invitations to all of our existing customers. One of our goals is to try and have at least one webcast each month based on the turnout we've had for the last several webcasts that we put on. We realize that it's something people are definitely interested in, so we want to continue with that. And we're working on some various topics that we can put into webcast format for everyone. Any questions yet, Billy?
No.
Okay, then why don't we go ahead and wrap things up. As I said before the webcast started, we did record this. We will be sending everyone within the next week or so, sending everyone a link to our customer content webpage where they can access the recording, and then you can also access any of the recordings of the webcasts we've done in the past. We're starting to build the library of webcasts on our customer content page. And I wanted to thank Rob for putting together and presenting today's webcast. Did a nice job, Rob. And I also want to thank everyone for taking the time out to attend today's webcast. So
Tom, we do have a couple of questions.
Okay, good. Why don't we try and answer those now then?
Okay. What other tables are frequently exported to SQL besides the sales debt table? Sometimes it is difficult where to find the information that is pertinent.
Yeah, I guess we would want to try to understand what is the purpose of the report they're looking for. So, some people, if their role as a purchasing manager, they're really interested in what's going on with inventory and the buying decisions there. Some people are more focused on what's going on with bill of lading, so we've flattened out the bill of lading files for some folks. Is there a particular business area that this person's interested in?
If you'll send me another question, I'll read it out to you. In the meantime, there's another question. In what module is the end-of-day tool located?
It's not really located in a module. We'll have to post those setups, Billy. It's setting up the roll-up codes on the customer account and so forth. Can we just post the setup document online for folks?
Sure, we can do that.
Sure. Why don't we plan on sending that out with the follow-up for the webcast? We can include that with it.
Yeah, I guess the point I want to make with the end-of-day tool is it's not something that you have to run every day. It's just a one-time setup, and once it's set up, you automatically get an email every morning. So there's no action required on the part of the user. You just open your email, and there's the end-of-day tool.
Okay. We'll include that with the follow-up with the link to the recording.
There's one other question.
Anything else come in, Billy?
One other question. Will today's slides be available for printing?
We can go ahead and include a PDF copy of the presentation along with the link to the recording. So we'll take care of that as well. All right, anything else?
That was the last one. Oh, here is one.
Okay.
I have one more. Is Profit Link a separate module?
It is not a separate module. You'll actually see it in your accounts receivable module on the reports menu. About 2/3 of the way down, it says Profit Link Performance Analyzer. When you click that, you'll get prompted for a date. You enter the date of the month that you want to look at, and it'll start auto-generating your pivot tables for you, populated with invoice information. So it's inside the accounts receivable module.
One more. Is there a separate price for the sales debt module? I believe this would be a SQL question.
In the latter versions of DM2, I think in the latter versions of 405, where we put the SQL export feature into the masters, so it's stock, it's part of the package, the sales debt file is part of that. There's no additional charge to get the sales debt file. It's just whenever you set up that automatic push, sales debt automatically gets pushed as well.
Okay, unless there's no other questions, we'll go ahead and wrap things up then.
Right, thank you very much.
All right, thanks again, Rob, and thanks to everyone who attended.
Okay.
We'll have the recording and PowerPoint slides out to you probably within a week or so.